All right, let's get it going. It is, February 25th. We're almost 2 months into the year already, guys. Feels like
March.
6 months, doesn't it? I'm Benjamin Bry. I'm joined by Bob Morris and Kevin Baker. We're going to chat a couple stocks, a couple charts, and let you know what's going on that's interesting in this market. Let's kick it off with Bob. What do you got today, Bob?
Yeah, thanks, Ben. So we had Diamondback Energy report after the market closed last night. And that's one of our core E&P holdings in this space. It's the only large cap pure play in the Permian Basin. And they reported a very good quarter. And the stock, I'm looking at my screen now, it's the only energy name that's green today. We still be looking to buy the name at these levels. It's underperformed over the past 6 months, I think largely on fears that when they acquired Endeavor Energy, which closed in September, that was a privately held family company. And there's been fears that family may, after the breakup, look to sell stock. But they downplayed that today on the earnings call that just ended. But importantly here, among the oil names, we had two report last week, Oxy and Devon. They both raised their dividend by 9%. Diamondback came in and one-upped them and raised their dividend by 11%. So now you're looking at a energy company with about a 2.6% yield. And they said they can cover that dividend and keep production flat at $40 a barrel WTI. So that dividend is safe. And I think as we go forward here, each year, continue to see that dividend increase. But at the same time, they continue to trend in this sector, which is very good, is that their oil production came in slightly above the high end of guidance. Their capital spending came in below guidance. And they're looking at continued efficiency gains in the next year. Their well costs per foot are down 7%. Interestingly, Oxy said their well costs this year will be down 7%. They can execute their program they can drill 100 wells per year with a completion crew versus 80 wells per year 1 year ago. So these efficiency improvements or gains continue to be very significant for this sector, continue to drive down that break-even oil price for all of these companies. The interesting thing is that though they have to pay down a little bit of debt here with the recent acquisitions they've done, which have been very good deals, they continue to focus on share buybacks. And they really leaned into the share buybacks in the fourth quarter, have continued to do so here in the first quarter. And they've indicated that excess cash that they're going to generate, which at $70 oil will be $20 per share this year. That's a free cash flow, $20 per share at the current oil price. They're really going to lean in the share buybacks, not special dividends, but share buybacks, given what they see in the valuation for their stock. Bottom line, this is still a name we like in the energy sector. I think it should be a core holding. Again, the one pure play in the Permian Basin, and we would look to continue to buy this thing. We have a full position.
These guys have kind of always been best in class, right, Bob? I've been around in energy and E&Ps for a long time, and these guys were always, I remember buying these guys in 2016 in the disaster that was 15-16 when they got their recap done and the whole space traded up. And I couldn't believe the valuation was trading at them. But looks like they're giving $5-6 billion of cash to shareholders now. Is that right?
Oh, yeah. I think they bought back $1 billion worth of stock in the fourth quarter. And maybe that was a full year, but I have to go back and look. But yeah. And look, Pioneer Natural Resources was the big pure play in the Permian before, and then Exxon bought them. Now Diamondback last week announced the acquisition of Double Eagle, and they said, look, this is really the last big Permian play. The M&A is run out here. There's no other big assets to buy in the Permian Basin. So now you sit back and say, okay, who's going to buy them at some point? And down the road, and maybe 2 or 3 or 4 years, who knows? But Exxon, Chevron, are they going to be the pioneer that they then buy in the future? But they're the last big pure play Permian name, and they will remain so until they get acquired because there's a dearth of assets now to buy or consolidate in the Permian Basin.
Yeah. I like it. The chart looks a little bit iffy right here. What do you think about the chart, Kevin?
I love Bob. I really do, but I don't like his charts. I'm sorry. I think this is probably the best house in the neighborhood, but the neighborhood's not great. You have this resistance here at 167 And I don't know what the hell is going to get that above that. And then you have all these people here that want to sell you stock, and you just don't. You just don't have a lot of portfolio managers grabbing their energy analyst by the lapels because he's probably not there or she's not there anymore. And so I have to own E&Ps. And so until that happens and flows start to happen, I think you can relatively outperform. But I just think there's so many ways to make money. I don't want to walk through quicksand to do it this time.
Yeah, and look, all these names are beholden to the oil price. And today, like I said, Diamondback's the only name that's green on the screen. Everybody else is down because oil's down 80 cents this morning. We're below $70 a barrel. And that scares people. And they know what Trump's agenda is, but nobody's following along. The one thing I pointed out with Diamondback is they said, look, we're going to focus on returning capital to shareholders and efficiency gains, not growing production. So sorry, Donald Trump, they're not playing your game, but everybody's still beholden to the oil price here. In the meantime, I think, Bakes, you pointed out in some of your charts here that gas looks good. And natural gas is up here at $4. And I said, look, I'm waiting on EQT to buy this name between 45 and 50. We're down here to 48 and change. So I may nibble on that again and add a little bit to my position in EQT. And then if we get a further pullback and expand, my cost basis and expand still a lot lower than where it is now. But I'm looking still at these gas names for a further pullback here into the spring to add to my positions in those names.
Yeah, EQT 48 or so, it acted real well in this deep seek gap down sell-off. And this volume is picking up a little, but it isn't egregious. And it's just one of the themes we talked about. Oil looks bad and natural gas looks good. It's that simple. And so if you have to tack to, I'm a landlubber, so I hope I'm doing that, to natural gas. And then the other thing I wanted to point out, because I listened to you talk about CapEx and costs and what have you, and oil field services, wake me up when September ends. And this is just...
Yeah.
Goodbye. This I cut my teeth on this in the 90s. I know I'm showing my age, but again, if you have to own energy, you own some natural gas, you own FANG because it's the class act on the oilier names. The integrateds don't get me excited at all. But so that's just what I see in the charts. And you've forgotten more about fundamentals than I know, but that's what I see going on.
Yeah. And I'd throw in there you've seen a pullback in some of the midstream or pipeline companies, Kinder Morgan, Energy Transfer, Williams. And again, we've got a full position in Williams at a lot lower level than where it's at today. But on further pullback in Energy Transfer and Kinder Morgan, those are the names I'd be looking to add the positions on here.
Yeah.
On EQT, what I point out, I don't know what your chart shows, but EQT, I see very strong support at 45. And I'd really be backing up the truck if we got back down to closer to 45 on that name. And we very well may here in the next month or two as things warm up into the spring.
Yeah, it's going to be 50 here in Boston, so
it's getting warmer, getting springtime. 72 here in LA. Very nice weather. It's one good thing about LA. But Bob, what about the C&Q here? We're at 29, and you said it's an auto buy above 30. Let me just ask you on that real quick while I got you.
Yeah, it's getting hit by the tariff talk that came back to the forefront this morning from Trump. And if Trump puts tariffs on Canada, which he said this morning, that's back on the table for both Mexico and Canada. And even though it's going to be a lower tariff for energy, that's what's really been the headwind here on C&Q. And you're down here, I think we're getting close to that level that Bakes put out in a note this morning that you don't want to see it close below. But, and they haven't given their date for their earnings call. It should be in the next week or two. But I still love that name down at these levels. Can you get it lower? Maybe. Yeah, the technicals are playing into that. You've got the tariff headwinds. But this is a name that I have to go back and look. But I think the dividend yield, which the dividend is safe, is maybe approaching 5% here. It's crazy.
Yeah, 28. Go ahead, Bob. This is one of my prepared charts today. And again, I try to help with the tactical aspect of this. 28.65. Once you get below that, I think you're heading lower. The volume is picking up on the down days. And then my point with the note today, 24.41 or so is where it goes. And that isn't disastrous. Hell, we've all lost more money than that. But my point is it steers up an elevator down. And when you close below 28.65, especially with Canadian in the name, I would be more interested in picking it off at 25-ish than at 28-ish.
Yeah, it'd be unless oil price. This is my opinion. Unless oil prices pull back a lot more from here, I think it's going to be hard to see 25 on this name. Their dividend yield right now is 5.3%. The last time it was down below 25 was 2 or 3 dividend raises ago. We'll see what they do here in the quarter when they report. I think they'll have a good quarter. They may raise the dividend again. They will at some point this year. I understand the technicals, but from the fundamentals, given where that yield is, given where everything else is playing out, unless you see a sharp pullback in oil, I don't know how much lower we can see this stock. Like this is a name you can buy, collect that 5.3% dividend yield, and it's a long-term holding. You're not going to lose that, and you're going to see the dividend increase every year.
Yeah, I think that ultimately these are the kind of events you want to buy. Trump's not going to be here forever. These assets, this is world class. And I don't know, it just might be dead money for a little while type of thing. Bob, is that the best way to think about it? Like worst case, it's deadish money. You get the carry you just talked about. Best case is they doesn't do the tear up, it re-rates higher. And obviously the oil thing is independent of this. Like what the oil price does is a different animal. But just from that, I like it, honestly. I think it's like a decent, like relative to some of the other energy names, especially, right? Because it's already been discounted quite a bit.
Yeah, this is a long-term investment. It's great. It's done wonderfully. Every oil company that's reported so far has beat expectations and popped on the earnings results. Now, this is a Canadian company, but they have yet to report here. And I'm not expecting any bad news.
All right, cool. Anything else? Bob, do you have anything else for us today? Or otherwise we'll move to Kevin.
Yeah, we'll move. The other name I'm watching for, again, I mentioned this last week, is EOG. They report Thursday after the market. That's one name, again, like Devon, Oxy, Fang, I expect to do well, maybe even better on the upside expectations on EOG than these other names have reported so far. So I'm anxious to see them report after the market on Friday.
Okay. Yeah. EOG, Diamondback, you're sticking with some good. Although I realize a lot of the crappy names that I used to remember are just gone these days. They're not even really around like they used to be, right?
Good names and bad names in the consolidation.
Yeah, it's true.
Pioneer's gone, and the predecessor to Diamondback's gone. There's been massive consolidation in this sector.
Yep. All right, let's move on. Kevin, what do you got for us today, buddy?
Yeah, I want to go through some of your names too. I know you're moderating, but you had some interesting charts that you were talking about. But we talked about C&Q, and I just hope I'm helpful and respectful because I just want to call him like I see him, being a market umpire. And I think you have about $3 a downside to that 24.41 level. This is IWM. It showed up on my charts. And it's just, these are the kind of things that I look for all day, every day. And it's break of the 200-day moving average. If I own this, I sell a third. I sound like a broken record. But I've developed this discipline over the years. And number one, it saves me a lot of money. And number two, it's good for my psychology. I know exactly what I'm going to sell and when, and I don't spend a lot of time ruminating about things. The Trump bounce is over and small caps are getting smacked. This is if I recall correctly, I'll say lower quality small cap and IJR. So this is the Russell 2000, a lot of biotechs, a lot of small banks, a lot of money losers. And I can understand why these are falling out of favor. But this close below the 200-day moving average and this follow through is a negative. And I sold the other day because I try to own the 10 best ETFs that are out there. This is the S&P small cap. They make them all be profitable in order to be included in their small cap index, but it's little solace because they're taking these out of the woodshed too on big volume. And just an overarching theme. Damn the torpedoes, we're taking torpedoes. And that to me is shots to the hull and on big volume. And we're starting to see it be very widespread where names are getting beat up. And I'll check on why that's not updating. The name after name, we can go through yours because there's a lot of damage being done. And I'm more cautious than I have been in a while just because the charts are telling me to be. So we'll talk about one more in a minute. But the high volume downfalls or downdrafts are really starting to pick up. And I would raise the quality bar, raise the fundamental bar, lower the position sizes because we're in a storm. We're in a storm, in my opinion.
I agree with you, buddy. I as bearish as I can be at the moment, and I'm positioned max bearishness. So
yeah,
and
I've been hold on. I've been less, and I'm hoping that these charts update now. But this is IWM, and Jen, you tell me if that. There we go. But this is happening. Just so everybody knows that are members, I go through every single stock that we talk about on this show every single night, and I love it because things catch my eye, and I try to alert people to troubles are brewing, and I think that's happening left and right. And I've got one more if you want to, Ben, but then I do want to go through some of your names that you discussed offline. Okay. All right, this is. And I'm so sick of talking about this, but you are probably too. But NVIDIA going to report. Everybody talks about this. This is the DeepSeek scare. I said sell a third. I was very public about that. All right. We've rallied feebly. Here's the big volume that you see here. All right. The volume is picking up on the down days. I don't want to see that. That's these pink lines. Our volume picking up, that just means people are more serious of smashing the button and, get me out of here. And when you have a stock that's been like NVIDIA, where everybody owns it, everybody's overweight, everybody's genuflecting to it, then this is what you have. So you had this gap down, feeble rally, and now here we are taking out the 200-day again with earnings on Thursday, I believe. I don't know if it's before the open or after the close. They usually do it after the close. For the first time in a long time, I said this isn't Cisco. I've said this for 2 years. And I don't think it's exactly like Cisco, but it's starting to roll over and it's starting to trigger my sell signals. Already a third I would have taken off the table and the bar is going to be high. So let's watch the Thursday for a reaction. But again, if the 50-day comes down through the 200, I sell another third. If the 200-day goes down, I sell another third. And we're starting to take on, again, the torpedo has hit NVIDIA and it's taking on water.
All right. Yeah, we got tomorrow. Basically, after the close, I think it feels like it's heavy. The market's getting drilled right now. Again, I'm looking at the board and rates are now going vertical. Credit spreads are going vertical. Yeah, Bitcoin's dumping. I don't see how when we look at HIMS, Walmart, Axon, all these really popular stocks that have gotten dropped in earnings, I don't think it's even going to matter. To be honest, I don't think they're going to print anything that's going to do anything to keep this alive. And maybe they'll get a little bit, and it will probably be a good print, but I just don't think it's enough. Just when you look around the market, I don't think that this narrative is strong enough anymore. I think growth is being rated down. I think everything you just said is right. More volume on down moves. People are distributing their stock, and it had a great run. It's a lot of market cap up there, right? It's not like it's a $300 billion or a $30 billion stock. This is a $3 trillion stock, right? It is what it is, I think.
Yeah, and this is how stocks look when stocks dive. With all due respect to Prince, you have a move that goes from you've got a 10-bagger here plus, and it's just time. And you get to a point where the analysts are on the one side of the boat, the long onlys are on one side of the boat. Probably the pods are on one side of the boat. I don't know, but I'm telling you, I've studied hundreds of these. This is what they look like. And so if you owned it, I would sell a third already and be ready to sell the other 2/3. And if you have a fundamental reason why you just want to shoot it right now, that wouldn't bother me one iota.
Yeah, look, and so everyone knows that's listening, I was one of the very first guys to call the top on NVIDIA last June, and I wrote it up on the site. And it was like how we did
before I got here.
What?
Before I got here.
Before you got here, correct. And
just want to make the chronology. I want to start the chronology.
And you can check my Substack as well. I published it there after the fact. It was just it got too far ahead of its skis, and now we've been flat. You had to move down to $95 on the August carry crash, and then you had a rally that was a good rally. But for the most part, it's just a flat stock for going on 9 months. And so, it's a long time. Microsoft, that's a year of not making any money in Microsoft. I just think that people got to look around, and the stuff that's working is smaller cap stuff, some domestic oriented stuff, and the stuff that had been working just clearly, with the exception of Apple, which just, I don't know, it just always goes up. Apple's an enigma. But besides that, I think that it is what it is. And I think, look at Microsoft. What do you think of that chart, Bakes?
I've been on with this. This has been a sell to me for a long time. I've talked about this. This is the first Mag 7 that I said, get the hell out of the way. And here's the 50-day going down through the 200 the first time. All right. And then the 200-day turning down around here. I'm just making this, I'm squinting and I'm too vain to put my glasses on. But here's another death cross. That sounds ominous, right? Well, it should, because here's the 50-day coming down through the 200 on big volume again. And we are now below 400. And who's going to be buying this? You got to be here at 385 before anybody shows up. And then you go to lower prices after that. So I like to point out to people that when you hit new lows, 52-week lows, that's a bad list. And people just don't want to have these stocks in their portfolio at the end of the month and the end of the quarter. And this isn't your grandfather's Microsoft anymore. So goodbye.
Congratulations, Mike. You've been dead right on that call. I remember when you made it, and a lot of people like, what? You want to sell Microsoft? But you have been dead on that call. So congrats. That's been fantastic.
And yeah, that is great, Kevin. And I think the one thing that people got to remember is a big part of leverage finance. So long, short equity, like prop trading, is you fund your trades, right? To take it, dampen the vol a little bit. This has been an unbelievable funding currency. Look at that chart. It's going nowhere. So you can sell calls against that. You can short the stock and buy some other stock with it. And one thing that people don't always realize is sometimes really good shorts don't have to go down. They can just be flat like that, right? Because then you can use it to buy more and it moves with the market. So you can dampen some of there's like August 4th last summer. There's things where you can offset it. And this has just been an unbelievable one. And look, that chart looks bad. There's a lot of bad looking charts, as you said, Bakes.
But look at these three arrows. If you follow the sell discipline, you're out at higher prices than where you are. You're deploying that capital in longs or shorts that are productive, and you just step out of the way of this. And if you're if you're hugging an index and you take out this 6% of the S&P and say, I'm gone, that's performance. Now, I don't care about that, but if you're running a $1 billion portfolio, this kind of stuff works and matters. And there's a lot of people right now that are saying, wait a minute, I own 8% of NVIDIA because it's worked and I had to get to overweight. And we'll see how comfortable that is on Thursday and Friday.
Yeah, I agree. The only thing it maybe has going for it, because it's at 525 now and the market's down 1% now, is maybe we just sell right into the print. And if you sell right into the print, maybe it comes into the print at 110 or something like that. And maybe I just think that like all these things are somehow tied to this NVIDIA print, but I don't know. Like it just doesn't seem like the market's really going to care as much as people think it's going to care.
We talked about a month ago, stock after stock was feeling heavy. That's hard to describe, but if you've been doing this for a long time, you just get the sense that stocks are laboring to go north and to make you money. And it's just, I keep going back to this dynamic that I don't think a lot of individuals think about, where you have a PM that you normally don't like, and he comes in and screams at you as an analyst and says, get me more into oil and gas, or get me out of oil and gas, get me more into tech, give me some AI exposure. And now this conversation is sharpen your pencil on NVIDIA. Good luck, by the way, trying to analyze a $3 trillion company with 40% of revenues in the metas of the world. So I just think that flows matter. and sentiment matters, and the flows and sentiment are going away. Am I being vague?
Go ahead.
No, Ben, I was going to ask you a question.
Am I being vague? I'm just trying to be cute.
You've been bearish. You've been right on these names. And you said what's working. Well, is names like NVIDIA and Microsoft have fallen out of favor. What's really been working the past week is healthcare and consumer staples. That's where the rotation seems to be going into. As investors look and say, yeah, I need to get out of NVIDIA or take a pause on Microsoft, should they be buying then the healthcare and the consumer staples? Or I don't know if you have a view on those, if those continue to work, as we've seen them really pick up a lot.
Healthcare is not a monolith. Healthcare is what do the managed cares led by United Health have to do with unprofitable biotech or biotech for that matter? What do the tools companies or the Thermo Fishers or the McKessons, how do they play all into this? So I just have a hard time, and I covered all this stuff. I covered it all. I was a healthcare guy for a long time. And that's why I go to the charts. It's the subgroups that you have to pay attention to. I don't see anything right now that makes me jump up and down and say this part of healthcare is really looking great. I frankly see a lot of places like managed care, and if you own a PBM, that's a bad place to be. Hospitals, again, wake me up when September ends, and I can go right down the list. I don't see a lot. And now, come back to me. I'll come back next week because I go through every damn group out there, all 4,400 of them, and I literally try to cover the left side of the screen so I don't look at what it is and bring my baggage. And I'll say, hey, listen, this part of healthcare really looks great. Let's get involved. But right now, I
got involved. And I pitched Budweiser, ABI InBev on this show in the middle of January. Okay. And that's been a pretty good stock. I think it was $47 at the time. It's $55 now. But let's just be clear. A lot of staples have worked, right? So staples are a proxy for bonds are an absolute ripper. I own bonds on the front end, the back end of the curve right now. And I own the Budweiser. Unfortunately, I'm short some Pepsi because I hate that thing, and that's going against me right now. But yeah, staples are definitely getting a bid. Look, I think growth's being re-rated very clearly if you look at the curve and you look at the markets. And so if growth gets re-rated, people start to get worried. There's a lot of leverage out there. And Pepsi and Budweiser's still the king of beers. And Apple, and to be fair to Apple, it's still Apple and they still produce a lot of cash. So I think right now it's clear that businesses that have somewhat stability in their cash flows are getting bid, basically. And that's what's going on. And that's very normal in a sell-off. If you do the XLP divided by the XLY is just a simple proxy, and it's not perfect because there's a market cap issues there, but if you did an equal weight version of them, you'd see it's just breaking out. It's breaking out with bonds, and it's basically the same chart. What's going on?
I couldn't figure out the ratio, but here's the staples, and this is classic. I need to hide, and I need to sell my Microsoft, and I'm going to go buy, Pepsi, I guess. I think they got a little bit of a bounce because of the Celsius ownership they had. I think that's part of it, and that deal. And here's the discretionary breaking down on big volume. And I want to do this because, Bob, I like to check my biases. This is the XLV. This is the J&Js and the Mercs and everything is pretty much in here.
AbbVie and Amgen, are they in there?
Pardon me?
AbbVie and Amgen, are they in there? They bounced here.
I got to go back and look. My suspicion is yes, but I'm going to go through all of this. But this is the first time, and this isn't great, but this is the first time it's perking up, volumes picking up, the relative strength is picking up. It has not a hell of a lot going on for a better part of 2 years. I'm going to have a very open mind and open eyes, and I'll come back and say these are the healthcare groups that I think make sense. And I just remember, again, dating myself, 2000, and I'm not saying we're there yet, but everybody wanted to cover internet and technology, and then I just said I'll do healthcare because there was no one there to do it, and literally you could just feel the money go out of the Ciscos and the Lucents into hospital stocks at 3.5 times EBITDA, and they took them to 6.5 times EBITDA, and I look smart because I could read a chart and I could see the flows. And maybe that's what's going on right now, or at least it's the start of it. We'll see.
Yeah, look, it will be interesting to see, but when you think about the dynamics that have been present in this market, so post COVID, you had a very pro markets, pro stimulus fiscal policy. That's clearly, as Bakes and I have talked about, being walked back. What the extent is, what the exact dollars is, will be determined. Rates are coming down, which is the key that they want to get done. That's part of that running the tariffs, and it's part of basically cutting. They want to get rid of inflation, and I think that you want to get the housing market working again. You got to get rates down. You got to get rates down, and so there's just a momentum decay that's been present in the Mag 7 for a while, and as Kevin just said with the charts, you've seen it, and it's just eating itself. And now we're taking out the curve's inverted again. Look, the curve's inverted again. Fed, I don't know what the hell the Fed's doing right now. They're out there playing pickleball somewhere, as they always are when the market rolls. It's just unbelievable how consistent these guys are. New chairman, doesn't matter the chairman's name. They always make the same move. Anyway, so yeah, it's heavy out there, and I think that you got to be a little cognizant that if the monetary policy isn't there for you and the fiscal policy is not there for you and valuations are stretched on a lot of stuff, know what you're buying. That's one of the reasons I like the Budweiser. It's cheap. People buy beer. They're going to buy more beer if there was a recession. They're going to move down from the micro crafts or craft beer or whatever. But there's things to own, but I think that's going to be different stuff to own than what was really the high flying and all this stuff. And you just got to look around. Palantir, Tesla, all this stuff that was the go-to is getting dropped right now, like a bad habit. So anything else, buddy?
You brought up Tesla, and I know you like Tesla a lot. You're a big fan, and you own the car, and you and Musk have tea every now and then.
I love shorting that.
Here is election day, and we're getting close to retracing election day. And if you could now, the volume isn't that monstrous, so I'm not hitting the button yet. But there's a lot of bloom coming off a lot of roses, including Tesla.
Yeah, I think Tesla has a bunch of problems. It has the problem of Musk pissed off a lot of people. And I think it has the problem that Europe is in that camp. And then they got the problem of BYD being just a dominant force out of China. There was a report this morning that BYD is ahead of them in the UK for the first time and gaining share in the EU, gaining share in China. Look, the EU's or BYD is a serious competitor. And as everyone knows, that's been my favorite Chinese stock for the whole last year. It's been fantastic. These guys are amazing. So you have the political element to it. You got the high valuation, and then you got the BYD on their heels, plus other competitors on the EV space have caught up some. And just so you know, I took a Waymo to work this morning. So robot taxis are out there. They were all talking about, oh, they're robot taxis. I'll tell you what, I take a robot taxis to and from my office here in LA, and it's not a Tesla. I'll tell you that. So they got some issues.
Yeah, I agree. And I think they really have issues. The election close was 288.53. That isn't very far from where we are. If it closes below that, then you have a problem. Then you test 277, and then you really have a problem. And look at this. You've got 200 points of supply up here of people saying Tesla's the second coming of the Lord. And this is going to leave a mark.
Yeah. Yeah. I thought 277, 280 was level. It was like, all right, that would be the line in the sand, and we'll see what happens when it gets there. I don't know. I just feel like that's a tough one to be like super excited about at this point. Yeah, other than, hey, I might buy it because it's oversold and, you can get a relief rally type of thing. That can definitely happen. But in terms of, hey, this is a place to hide, I don't know.
You talking about Tesla?
Yeah.
Tesla's not a place to hide.
I mean, facetious. Great.
Yeah, no. And that's why I always stress the close. If you want to play this for a trade or a bounce and you think it's oversold, okay, but have a tight stop. Because if it closes below those levels, you're hitting air pockets, and it's going to go down a lot. And everybody's going to be talking about it. So you better respect this 288 level. And if it doesn't, then you're going lower and hard.
Yeah. Agreed on that. Really good call on Microsoft. Appreciate that. I do think that people, speaking of places to hide, that C&Q is not a terrible, like no one's like interested. That's like the last thing that's top of mind. Like good company that's the national champion, some short-term noise, and yeah, I could hurt them for a little bit. World champion businesses don't go on sale like that often. And again, to Bob's point, you're going to get a positive carry, which is nice. So yeah, you got to watch the price. But again, the world needs oil and gas, and I don't think that's going to change with the Trumpster. So I like that, and I like the idea that Microsoft and Nvidia can break down from here.
Yeah, and maybe I'm not that bright because I'm saying it before the event because that's where I think we add some value. But I'm just looking at how this NVIDIA is acting, and if I had to bet, it's to the downside. And maybe they blow it out, and maybe Jensen says wonderful things that people believe, and DeepSeek goes into the ocean. I have no idea, but right now it feels like it wants to go down.
Agreed. And it's weird how that is. I guess when you've done this long enough and you've seen enough charts and you watch the tape, you sometimes can just feel it. You just feel that it's heavy and the pops aren't there anymore. Earnings beats aren't rewarded like they were. Earnings misses are hit much harder. And we've seen that recently in the action and the prices. And yeah, it just might be that time, boys. And the last thing I'll leave this with, to leave it on a positive note, is that if you go to March 2020, or you go into the 2002, 2003, or you go into December 08 to March 09, when you have, or even 22, goddamn, I bought Palantir at 650. Now I sold it like $17 because I'm not the best holder. I'm much better at identifying the inflection points than I am at being patient. But there was a lot of stuff for sale. I bought Meta at $92.22. Things going on sale can be great. Just be ready for what the things that you're interested in that could go on sale. And it's just another cycle. Things go on.
Amen.
All right. I think we're going to call it there. Thank you, boys, for joining me today. Kevin Baker, Bob Morris, and I am Benjamin Bry. We will leave you there. Take it easy, guys.